Don't miss this Bitcoin cycle, it's just getting started. The market feels like absolute chaos lately. Prices crash multiple times a day, and every position seems to move against you. Just looking at the chart feels suffocating. Right now, the atmosphere is pure fear. But, ironically, markets always build their next direction in times like this. Some people are panic selling everything and walking away, while others have been waiting for this exact moment. Because the real opportunity doesn't come when fear ends, it comes when fear explodes. Lately, exchange balances are shrinking, stablecoin circulation is rising again, and institutional wallets are starting to move. This isn't a rebound signal. It is the beginning of a capital reshuffle. Most people miss it because they only look at price. But the market doesn't move by price, it moves by intention. So let me ask you something. Do real experts even exist in this market? Sure, there are people who've made big money. I have met many myself. But if someone truly got rich from trading, would they really have a reason to teach it? That's why most paid trading courses fail. Because real traders don't sell secrets, they protect them. Think about it. If someone's already making money trading, why would they be selling a course? So, I decided to make everything free. Don't waste money on random paid classes. Invest it somewhere that actually builds value. I've already organized a full roadmap that shows what to learn in what order based on your trading skill level. You will find the link in the pinned comment and description below. In markets like this, if you rely only on gut feeling, you will get wiped out. No doubt about it. But those who understand structure turn this chaos into opportunity. In the middle of fear, you either panic or you prepare. And that choice happens right now. Jerome Powell just dropped a bomb at the latest press conference by opening the door to further cut rates before the end of the year. And that one sentence completely changed the mood of the markets. For the last 2 years, the world got used to an era where money was expensive. Companies stopped expanding. Investors clung to cash. But now, that order is starting to break. A rate cut isn't just about boosting the economy. It means the flow of money is opening again. And capital always moves toward where profits are highest. When bank yields drop, money looks for better returns. And it moves straight into risk assets. Bitcoin, Ethereum, tech stocks, real estate, all of these front lines are opening up again. Powell's comment flipped the market traffic lights from red to green. People might still be nervous, but liquidity has already started to move. Historically, every time rate cuts begin, asset markets react 6 to 12 months ahead. Right now, that clock had just started ticking again. A rate cut isn't just a policy, it's a psychological reset that revives confidence. One sentence from Powell just restarted the frozen heart of the markets. Now, many people hear rate cuts and immediately smash the buy button. But by then, it's usually too late. Because before Powell even said a word, the market had already started moving. If you don't understand this, you will keep repeating the same painful cycle. Hear the news, buy in, get dumped, stop loss. The truth is, informed traders move on data, uninformed ones move on emotion. So, ask yourself right now, which side are you on? Chart analysis feels confusing, right? You're not even sure where to start. And the frustrating part, there is no single correct answer. So, again, do true experts even exist in these markets? Because if someone really got rich trading, will they actually want to give away the secrets? And that is exactly why most people fail using the same paid trading methods everyone else buys. That's why I created a full trading roadmap, completely free, tailored to every skill level. If you want to make money but don't know where to start, this course is for you. You will find the link in the pinned comment or description below. For the past few years, the trade war between the US and China has been like a chain locking down the global economy. Import costs surged, supply chains broke down, and companies stopped investing. But now, the two giants are finally back at the negotiation table. The tension that started with Trump's tariff comments is now slowly shifting toward reconciliation. And this isn't just politics, it is the potential reopening of global liquidity. If the US and China resume trade, dollars start circulating faster, commodity prices stabilize, and capital begins to flow worldwide again. Think of the financial system like a giant pipeline. If one valve gets blocked, the whole thing stiffens. But when that valve opens, the entire world moves at once. And right now, that valve is finally turning. The US is cutting rates, and China is expanding money supply to stimulate domestic demand. They may look like they are moving in opposite directions, but the result is the same. Money is flowing back into the markets. When the trade war ends, years of suppressed demand and capital will explode all at once. And when that happens, crypto won't just be another risk asset, it will be the front line of global liquidity. Now, the very center of the market is shifting. We are entering a new era, not where prices rise, but where holding itself creates profits. And that shift has one name: staking. In the past, holding your coins did nothing. They just sat in your wallets. But now, simply holding earns you yield. Your money works for you. Major institutions like Grayscale, BlackRock, and Fidelity are now exploring ways to integrate staking into ETF structures. We're talking about a new type of products, staking-enabled ETFs, assets that generate yield just by being held. Investors now earn not just from prices increase, but also from the simple act of holding. This changes everything. It flips the foundation of traditional finance. Just like stock ETFs pay dividends, crypto ETFs are evolving to share staking rewards. The market is moving from value preservation to value creation. And here is why this matters. This model builds a culture of long-term holding. The market that once chased quick trades is now learning to see time itself as an asset. And when that happens, markets move slower, but much deeper. At this stage, what really drives the market isn't charts or data, it is psychology. Even though the data and news clearly show a growing direction, most people still feel uneasy. Every time a wallet moves, rumors explode. They are selling. Even a simple exchange transfer spreads fear like wildfire. But that's because most people interpret every change emotionally, not structurally. Right now, what moves this market isn't tech, regulation, or even ETFs. It is perception. Some see this phase as the end. Others see it as the beginning. And markets always follow the latter. Perception drives direction. So, what we need now isn't more information. It is a change in perspective. People say data speaks. But the truth is, it's about how you read it. Those who stay calm during fear and see structure within chaos, they are the ones who win the next cycle. And yes, when fear dominates like this, spot investors naturally shrink back, because spot trading only moves one way. You win if it goes up and lose if it goes down. But institutions and whales, they make money both ways. Futures aren't dangerous because of leverage. They are dangerous because people never learn how to use them. For traders who understand risk management, futures are actually more stable than you think. So, from now on, don't blindly fear the tool. Fear ignorance. Now, all the pieces are finally falling into place. Rate cuts are releasing capital. US-China negotiations are reviving trade. And ETFs with staking are reshaping the asset structure. Liquidity, policy, technology, psychology, all these once separate forces are now aligning in the same direction. This is what we call market resonance, when every factor starts amplifying the others. When money flows from one side, it gains speed on the other, and that energy lifts the entire asset markets. Moments like this don't happen often. 2008 after the financial crisis, when QE began, 2020 after the pandemic, when liquidity exploded. And now, here we are again. But this time, the structure is different. Back then, it was governments printing money. Now, it is systems generating yield on their own. Investors deposit capital. The network generates yield automatically. And that yield cycles back into the markets. This is not just a boom. It is a new mechanism forming right in front of us. All the right conditions, liquidity, innovation, psychology are aligning at once. Moments like this come once every few years. And the difference between those who trade by instinct and those who move with logic is massive. And guess who wins? Always the latter. If you keep trading on emotion long term, you will lose every time. Markets are not fair, and so is life. But they always reward those who are prepared. When every flow starts converging, the market doesn't just recover, it evolves. The era where interest rates, trade, technology, and psychology move to different rhythms is over. Now, capital no longer stays within one country or one industry. It seeks the path where returns circulate most efficiently. Powell's comments changed that direction, and tariff relief opened the door. Add in the rise of ETF staking, and the market has started behaving like a living organism. Money flows in, networks create yield, and that yield loops back into fresh investment. In this environment, short-term predictions don't matter. Positioning does. The real question is simple. Which assets sit at the center of this flow? Right now, the market has rebuilt its logic for growth. And the only thing left is who believes that logic first, because those are the ones who will own the future. Markets always move in cycles, but this one feels different. Past rallies were driven by hype and speculation. This one is built on structure and logic. Rates, trade, technology, psychology, this alignment isn't random, it is engineered. The next market cycle won't reward those who know more, it will reward those who see sooner. If you're waiting for change, you will always be one step behind. But if you recognize this shift, you can ride it. Now isn't the time to search for certainty. It is the time to create it. The market has already turned the page. The only question left is, which side of it are you on? Will you keep trading on instinct, chasing headlines and hype? Or will you learn with me to trade with logic, data and strategy? That is exactly why I built Trading 101. To show you how to survive these markets, not with luck, but with logic. You will find all the free courses and tools in the link below. So, hit that like button, subscribe, and let's keep building this together. Because in these markets, the difference between knowing and not knowing changes everything.